Understanding market baskets, a comprehensive overview. A market basket is a crucial concept in both economics and finance. It represents a selected group of products or assets designed to track the general performance of a particular market segment. This can also be referred to as a basket of goods. Market baskets play a pivotal role in understanding inflation, consumer behavior, and investment strategies. Key concepts related to market baskets. Market basket economics. Market basket economics primarily focuses on the Consumer Price Index, CPI, which is an essential gauge of inflation. The CPI tracks a variety of consumer goods, measuring the price levels of these goods over time to provide an estimate of inflation trends. Importantly, a diverse range of products, spanning over 200 categories, are used to compile this index. These categories include housing, transportation, education, and recreation, among others. By tracking the average price changes in these categories, economists can derive insights about broader economic conditions. Financial market baskets. In the financial domain, market baskets relate to a portfolio of financial securities. Index funds, for example, are investment vehicles that mirror a specific index, allowing investors to gain exposure to a broad selection of stocks or bonds. Notable examples of such market baskets include benchmarks like the S&P 500 or the Dow Jones Industrial Average, DJIA. These investments provide a baseline for investors to compare their returns, helping them make informed decisions in a volatile market. How market baskets function. A market basket is essentially a compilation of goods and services that consumers consistently purchase. Economists, politicians, and financial analysts leverage market baskets to track price changes over time and assess inflation levels. The CPI stands out as the most recognized market basket used to predict consumer spending trends and provide an overview of economic health. Market basket analysis in retail. Retailers utilize market basket analysis as a strategic approach to enhance sales. This analysis revolves around the concept of impulse buying. It attempts to predict additional items a customer might have purchased if they had been conveniently placed or suggested to them. Market basket analysts examine the purchase history of customers to identify patterns, such as which products are often bought together. This data can influence several retail strategies, including product placement. By strategically placing complementary items in close proximity, retailers can increase the likelihood of additional purchases. Demographic insights. Understanding which demographics engage in specific buying patterns can help in targeted marketing efforts. Time trends. By analyzing purchasing behaviors across different times, day of the week or season, retailers can optimize sales promotions for maximum impact. Moreover, market basket analysis isn't confined to retail alone. It can be used in predicting credit card purchases, assessing phone calling patterns, and even identifying potential fraud in insurance claims. Types of market baskets. The CPI is perhaps the most recognized market basket that serves a significant economic purpose. Unlike a cost of living index, which reflects the expenses that individuals incur to maintain a certain standard of living, the CPI emphasizes spending habits and price levels for urban consumers and wage earners. The CPI's market basket comprises goods and services derived from consumer spending surveys and includes several categories that are weighted based on their prevalence in consumer expenditure. Notable categories include housing, rent, owner's equivalent rent, and maintenance costs. Transportation, vehicle operation, public transport costs. Education, tuition fees, books, and supplies. Additionally, the market basket encompasses costs associated with government services, such as public utilities, water, sewage, and taxes levied on products and services. However, financial instruments like stocks and bonds are conspicuously absent from this index, emphasizing its focus on tangible goods and services. Real-world example: inflation trends and market baskets. A significant illustration of the market basket's real-world application is observable in the fluctuations of CPI. For instance, between 2020 and 2021, the CPI in the United States surged from 1.2% to 4.7%, marking the most rapid increase since 2017. This spike was attributed to rising costs in essential sectors such as gas, medical care, housing, and rent. This inflationary trend signals a growing confidence among consumers in the economy, as it implies increased spending. Governments and central banks closely monitor the CPI since it fundamentally informs monetary policy decisions. Institutions like the Federal Reserve aim to keep inflation around 2% to maintain economic stability. To address inflationary pressures, the Fed raised interest rates in response to evolving economic conditions, demonstrating the direct impact market baskets have on broader financial policy. Conclusion. In summary, market baskets are integral to understanding and analyzing both consumer behavior and economic conditions. Whether through the lens of the Consumer Price Index or as a tool for retail strategy, they offer insights that are invaluable for economists, investors, and retailers alike. By analyzing market baskets effectively, stakeholders can derive patterns and trends that facilitate informed decision-making, ultimately leading to enhanced economic strategies and consumer satisfaction.